Tattooed Chef's announcements came out. I'm just going to trash this thing. I'm going to prove to everybody how much of a piece of crap this stock is. One of the challenges I have as a YouTuber is that sometimes I got to apologize and sometimes I just got to eat my own words. And yesterday I woke up super early here in Japan. The market closes when it's 6 a.m. now after daylight savings. I woke up and I'm like, Tattooed Chef's announcements came out. I'm just going to trash this thing. I'm going to prove to everybody how much of a piece of crap this stock is. And actually I got super busy. We got some real estate deals going on. And so I was running around town all day and stuff. So couldn't do it. I'm going to try just a different type of video today. Real, just kind of like structured, unpresented. I'm not going to have PowerPoint and all that stuff. But, I was like, dude, management issues, they've gone back on their word a couple of times with the numbers they've presented. The way Sam Galletti kind of presents things and then goes back on things a couple of times has kind of disappointed me. And I've been like, I owned a Tattooed Chef a long time ago and have since sold out of it. I think I was like $20 when I sold out of it or something like that. And I was like, their marketing isn't good and I don't see how that's actually going to benefit anything. I've heard about these acquisitions a little bit, but whatever. I haven't actually spent that much time looking into it because you guys know I'm all like spending a lot of energy and money on things like AMD and even kind of riskier plays, similar market cap to AMD Tattooed Chef, Desktop Metal. I've been, and Skills, looking at these kinds of stocks that are easy to scale, unlike things that are dependent on importing food from Italy with shipping prices, destroying margins and stuff like that. So just wanted to put together a little video today about that and share off the cuff more honestly about, what I think. So when I listened to the conference call, and first of all, I'm like, dude, why is all this information coming out before, their conference call and their earnings report was supposed to come out after the market closed. It came out like 20 minutes before the market closed for some reason. And it's like, is there a leaker in the company? Are they just really crappy at managing things and presenting things? Like, how unprofessional is this? What's going on? I haven't really seen that before, I think. And I'm like, dude, so many funky things going on with Tattooed Chef that I'm uncomfortable with. And I wonder if almost like they're getting drunk off of the attention they've gotten from, big YouTubers like Jeremy and stuff like that. Like, what's the deal? I've not seen that before. What the heck, dude? So, going through I'm like, dude, it's going to hit $15. Probably it's going to fall apart after that. But as I went through the earnings report and looked more at, listen to the conference call, I'm like, actually, I wouldn't be surprised if this stock starts to go up. Maybe I shouldn't make a video about why Tattooed Chef is getting wrecked. Maybe I should make a video about like, dude, I was wrong about Tattooed Chef and maybe they're going to keep growing. I didn't spend any time to go into valuations and stuff like that. And I was kind of on the fence. Like, I could see how headlines punish. Check this out. What? I could see, headlines going out and saying, oh, they missed their revenue. It's supposed to be 60 million. Actually, let me get this thing on for you guys. It's supposed to be 60 million. And of course, all of these reports are very much, and conference calls are very much them selling you on their company, why you should be investing or why you should stay invested. So the way they present it, the way they word it is going to look good. But when you go out and look at actual kind of headlines, it's going to be like, oh, they missed. And, their margins are getting slaughtered by, they only have a 10% gross margin they're supposed to be at like 16, 18, I think it was. But they went on to talk about how marketing has ended up costing them more, even though they used to be spending like nothing on marketing. They were kind of supposed to be like Tesla, where it's like word of mouth. Everybody loves these new plant-based products. Super awesome for like, if it's just word of mouth advertising and they don't have to spend anything, margins get beefy, but marketing spend increasing kind of however they want to do it. Plus, on top of that, shipping, not only distribution in the US, but friggin' shipping food from Italy because they have a plant in Italy, and all the container costs and all that stuff going crazy in the market right now, ending up hitting their margins. Now they're only at 10% gross margin. So all this stuff, I'm like, dude, this company's garbage. What's going to happen? But then as I was listening to it, they went over all these different highlights, talking about a 50% increase in revenues compared to last year. They did have a net loss, but again, they talked about all the different things that contribute to that, like what I just mentioned. But then they started to go into all the different business highlights rather than the financial highlights. And, when I'm talking about skills or desktop metal, I'm okay with companies who are really, really small, $1-2 billion companies who are just pouring all their money into marketing and customer acquisition and building out their teams. And in a lot of cases, we look at Palantir, stock-based compensations are like berserk. And you're like, how are you spending this much money on rewarding your teams? And that's just what you have to do, especially, the more you get into tech, the more you have to be doing that. So I'm actually the kind of guy who's okay with seeing young companies sucking at all of these kind of basic elementary metrics, as opposed to, these more established companies we're often looking at, like AMD or Nokia or Dropbox, who have all of their ducks in a row because they're established already. So Tattooed Chef starts going into all this stuff, talking about their Foods of New Mexico, their Belmont acquisition, which is they're going to leverage to not only boost production output by like 3x, but they're going to be branching out of frozen foods into health bars and all different kinds of, they call them ambient as opposed to frozen food. They're just ambient temperature products. They're going to be branching out into like this whole other realm of products. And on top of that, when you compare their rate of innovation of products, even against companies that are like 100 times their size, their rate of innovation, the rate of not only making new innovative products that hit the market in a new way. They were talking about some of their Mexican food products. There's like no plant-based Mexican food products on the market, but those are selling really well. But they're also innovating faster than companies that are way, way bigger than them. And I think that's going to breed more customer loyalty and a faster rate of growth once, the supply chain issues can get sorted out and their new factories can get sorted out. And it could end up being growth. Wow, that's embarrassing. Let me turn that off. It could end up being growth in a way that we haven't really seen, from a food company in a long time, which kind of the numbers are showing, year over year revenue growth, as well as skew the number of products they have on the shelf, the amount of area they're taking up at more and more, not only big box stores, but also grocery stores and online direct sale avenues. And it's not only their private label stuff, but also their private branding stuff too. Of course, private label is much higher margin, but all they're like growing in a lot of different ways, it seems like, And so I was like, wow, this is not what I expected from Tattooed Chef. And I thought about buying in when it was $15.50 or whatever, but I was like, there's so much hype. There's so much like, Reddit, Wall Street bets, silliness going on with the stock. And the short interest is also insane on this company. It could likely go back up to 17, and it just as likely could go down to 13 after a report like this and after a bunch of the headlines that were coming out. But yeah, going on, they were talking about it's the fourth largest brand now in the category of health and wellness, and it's the number 2 brand in frozen vegetable entrees in health and wellness. And this Belmont acquisition is going to give them a 4-fold increase in production capacity. So seeing all these things, and I'm kind of like, wow, this isn't what I expected. And as far as the outlook goes, they were talking about total revenues up 45% over 2020 for this year, which they're expecting. And gross margins should get up to 12 to 14% as opposed to 10% where they're at now. They're trying to avoid distribution delays, and they're trying to deal well with the increase in freight and container expenses. Another really big question that came up during the Q&A portion was, how are people going to be indulging during this holiday season? Now, typically, Thanksgiving to Christmas brings not only a lot of retail spending on stuff, toys and, goods and stuff like that, but also massive spending on turkeys and whipped cream and pumpkin pies and stuff like that. And so how are people going to be indulging? Now, with people going back to work more, is frozen food consumption going to be going down? Or are people going to be spending more time at home on the holidays and therefore buying a lot more, you know? And so fourth quarter is a huge question mark right now, especially with worker shortages, supply shortages. It's my understanding that a lot of really big retailers, a lot of really big supermarkets are kind of really low on the inventory. And there are so many different factors that pile into it. Now, the confusing thing when you just look at headlines is up until this week, all the headlines are like everybody's quitting their jobs, unemployment, inflation, everybody's poor, like retail sales are going to suck. And then all of a sudden this week, all these headlines are kind of like, oh my gosh, retail sales are amazing. Everybody's spending so much money. Everybody has way more savings than they've ever had before. It's going to be a huge fourth quarter. And it's like, how do both of those things exist at the same time? And I feel like that's one of the weird things the media can impact us with. And also, you know, if you're reading headlines, oh my gosh, everybody's spending so much money for the holidays, I should go do that too, is a natural reaction we have subconsciously, you know? So fourth quarter is going to be a big question mark. And just, you know, I'm not even looking at the valuations of anything or the silly P ratios or anything like that. But it's, again, one of those things with a huge short interest on Tattooed Chef. It could end up going back up to $20, $25 in the next few weeks, or we could see fourth quarter results coming out at the beginning of next year. And it's like, oh my gosh, devastating, super crappy results back down to $13 kind of thing, you know? So I was wrong about Tattooed Chef for the very, very micro short term. And I could have made a lot of money on that, you know, $2 jump that we saw today, which was pretty surprising, pretty shocking. But at the same time, I'm hesitant to get in now, and I'm more excited about things that aren't restricted by physical, you know, distribution, physical trucks driving around the country while gas prices are going up and, you know, labor shortages are going on. I'm more interested in, you know, digital distribution and stuff like that. So all that to say, I was wrong about the video I was about to make about why Tattooed Chef sucks. Super interesting. I'm really interested to see where this company's going. I'm not buying in at the moment. Are you guys buying in? What do you think about it? Let me know. Love you guys. Talk to you soon. Stay generous.